When businesses bleed, the 1% buy. Their private buyers club is already active for 2026 deals. While most people are still doom-scrolling headlines about recession risk and praying their 401k doesn't evaporate, a small circle of architects is quietly wiring 8-figure checks and locking in cash-flowing assets at 40 to 60% off market value. Stick with me for the next 2+ hours and I'll hand you the exact mechanics, the term sheet language, the distress signals, the small-scale blueprint you can execute even if you're starting with low 6 figures, so you stop watching from the sidelines and start designing your own seat at the table. This isn't motivation, this is the architectural blueprint most channels are too scared to give you. Welcome back, architects. I'm Dr. Ben, and this is Wealth Architect, where we don't follow the market, we design the moat. In a world of followers, we are the architects of our own freedom. You've been told the safe path your entire life. Save 10%, buy index funds, wait 40 years. That's not strategy. That's a retirement lottery ticket designed by the system to keep you an employee, not an owner. Today, we're exposing the real 2026 playbook the 1% are already running behind closed doors. Private buyers clubs that turn economic blood into generational wealth. No hype, no recycled TikTok advice, just the raw, deconstructed mechanics you can start using this quarter. If you're tired of being priced out, if the knot in your stomach every time you open your brokerage account is telling you the old rules no longer apply, then lean in, hit subscribe, smash the notification bell, and let's build something that actually lasts. The hidden mechanics of the 1% Buyers Club. Let's pull the curtain back. No fluff, no theory, just the raw architecture that most finance gurus will never touch because it forces you to think like an owner. A buyer's club isn't some Illuminati handshake in a mahogany room. It's a tightly networked syndicate of family offices, high net worth operators, seasoned entrepreneurs, and private equity veterans who pre-commit capital and earn first-look rights on off-market deals. Here's the emotional gut punch most people feel right now. While the average investor is panic selling at the bottom, these clubs are already under NDA reviewing distressed balance sheets 6 to 18 months before the public even hears the company is in trouble. That feeling in your chest, that's the gap between follower and architect. Good. We're going to close it today. The core mechanic is simple but lethal. Pre-wired capital plus proprietary deal flow. They don't chase listings on biz buy sell. They get whispered about from investment bankers who are tired of 18-month marketing processes, from attorneys protecting their best clients, and from CPAs who want a clean, fast close for their retiring owners. I'm handing you the 3 real-world levers they pull in 2026, right now. Distress arbitrage. Companies forced to sell because high-interest debt from 2022 to 2024 is maturing and banks are calling in notes. Succession fire sales. Baby boomer owners with no heirs, health issues, or divorce forcing liquidity yesterday. Regulatory overhang. Industries getting crushed by new rules, tariffs, or compliance costs that create instant motivated sellers who just want out. Most people hear distressed and feel fear. The 1% hear it and feel opportunity. That cognitive shift is the first moat you build today. By the end of this section, you'll know the exact language these clubs use in their term sheets, the phrases that make sellers choose you over bigger players even when you're smaller. I'll walk you through a real anonymized 2025 club deal, a regional manufacturing business with $4.2 million in revenue that sold for 3.8 times EBITDA instead of 6 to 8 times a healthy company would command, because the club showed up with a 30-day close and seller financing baked in. You'll see the exact term sheet clauses that made it happen. Hidden target industries already bleeding in 2026, the 1% hit list. We're not guessing, we're following the money with surgical precision. Here's the hit list the clubs are circling right now, ordered from highest velocity opportunities to sleeper plays that will explode mid-2026. For each one, I'm giving you the distress signals, why the 1% sees 3 to 5x upside where everyone else sees risk, and the exact micro moves you can make this quarter to position yourself. Industry number 1, regional retail and consumer brands. Brick-and-mortar survivors getting crushed by Amazon, shifting habits, and 2025 supply chain hangover. Distress signals, negative same-store sales for 3 quarters, landlord negotiations, sudden owner retirement listings. Why the 1% loves it? Real estate embedded in the business, loyal local customer lists, and the ability to pivot to omni-channel in 90 days. Micro move you can take this quarter? Start building relationships with 3 to 5 local Chamber of Commerce owners who know which stores are quietly struggling. Your 2026 Regional Retail Scanner checklist, 9 exact red flags and 5 green flags that tell you a deal is club-worthy. Industry number 2, light manufacturing and supply chain dependence. Tariff whiplash, labor shortages, and raw material cost spikes are creating motivated sellers overnight. Real case study, Anonymized, a Midwest plastics components maker that dropped from $8 million in revenue to $5.2 million in 18 months. Club bought at 2.9x and 3x cash flow in 14 months by renegotiating supplier contracts the founder was too tired to fight for. Feel that anger rising when you realize how many good businesses are being abandoned because the owner is exhausted? That's the system working as designed. We're not mad, we're architects. We're here to catch what others drop. Industry number 3, traditional professional services. Small law firms, accounting practices, medical groups with aging owners and no succession plan. The gold mine, recurring revenue, low capex, and built-in client relationships that transfer cleanly. Exact script I'll give you for approaching these owners at local association events. Industry number 4, niche software and SaaS that never scaled. Post-VC winter companies with real revenue but no growth capital and burned-out founders. Why clubs win? They buy at 4 to 6x instead of 12 to 15x, install operator CEOs from their network, and flip or hold for cash flow. Industry number 5, specialty real estate adjacent businesses, self-storage, car washes, laundromats in secondary and tertiary markets. The sleeper play, recession-resistant, real estate appreciation baked in, and massive operational leverage when you apply the club's systems. Your small-scale buyer's club blueprint, the architect's 7-step playbook. This is where most channels go vague and lose you. Not here. I'm handing you the complete 7-step playbook you can execute, even if you're starting with $150,000 to $750,000 in deployable capital. Every step includes templates, scripts, checklists, real-world pitfalls, and the psychological framing that turns hesitation into decisive action.
Step 1. Network nucleus. Assemble your inner circle. How to find and recruit 3 to 5 like-minded operators in the next 90 days. Exact LinkedIn outreach script plus local event playbook that's converting at 40% right now. The shared pain opener that bypasses small talk and creates instant trust. Step 2. Deal flow engine. Build your private pipeline. Free and paid sources the 1% actually use, plus the hidden inbox hack that gets you invited to off-market deals. I'll show you the exact email sequence that turned a cold CPA introduction into a $2.1 million deal last quarter. Your complete 2026 deal flow scorecard. 12 questions that instantly tell you if a lead is worth your time. Step 4. Valuation moat. Spot the 40% discount before the seller admits it. Real numbers from 3 2025 deals. Step 5. Capital stack without banks. Creative financing structures that win. Seller financing structures, revenue-based loans, and the exact club commitment letter template that makes sellers choose you over bigger players. I'll read the template word for word so you can copy-paste and adapt. Step 6. Due Diligence War Room, 48-hour checklist that separates architects from gamblers. The exact 87-point checklist the clubs use. I'll walk you through the 12 red flag items that kill 80% of deals before they even reach the table. Step 7. Post-acquisition moat building, 3x cash flow in 18 months. The operational playbooks the 1% swear by. Systems implementation, pricing psychology, and talent acquisition that most new owners never master. Step 7. Exit architecture. Design the business from day one so you're never stuck. How to build an asset that either throws off life-changing cash flow forever or sells for 8 to 10 times when you're ready because you engineered the moat from the first week of ownership. Risk management and psychological traps. The 5 silent killers that destroy 70% of first-time buyers, and the exact mental frameworks the 1% use to avoid them, turning your fear of "what if I fail" into calculated confidence. The Architect's 2026 Action Plan. Your printable 90-day execution roadmap, week-by-week tasks that turn everything we just covered into momentum. We just went deeper than any other channel dares to go. Mechanics, industries, the complete 7-step blueprint, risk management, and your personal 90-day action plan. Here's your one-sentence takeaway you can tattoo on your wall. Stop waiting for the perfect market. Start building the buyer's club that creates its own perfect deals. If this episode just lit a fire under you, here's exactly what to do next. Comment below with the single industry you're targeting in 2026. I read every single comment and I'll reply with a tailored next step resource. Grab the complete 2026 Buyers Club Scanner Checklist plus 7-step templates I just dropped in the description. Completely free, no opt-in gate. Subscribe and hit the bell. Next week, we're dissecting how the 1% structures asymmetric debt in these same deals, so you can buy even more with other people's money. You are not a follower. You are an architect. I'm Dr. Ben. This is Wealth Architect. Go design your moat. I'll see you in the next blueprint.